Good evening, everybody. This is Scott Gillen from the Stock and Options Room for ShadowTrader with you on this 15 September short video. Firstly, you should have watched Peter Reznicek's weekend video on the FOMC event coming this week. Yes, the Fed's going to make an announcement. Rate reduction, followed by a conference call or a conference presentation by Chairman Powell. Since market valuations have become substantially priced in a small cut, any deviation from this or a deviation from a clear path in the future for more cuts is likely to make this market move excessively. There are two trades that I'm going to show you today that I think can take advantage of this excessive move in price action that we may see. Firstly, these trades will have an expiration not on the day of the FOMC meeting and rate cut, nor will they have an expiration on the Friday of that week. I'm going to go out to give myself some time, just in case I need to make an adjustment. I'm going to go out 1 week past that announcement. That would be the 24th of September. Here's the backing to the trades. I'm taking a look at delta and gamma of the call and put options. Delta tells me how fast an option will change in price in the first dollar move of the underlying. Gamma, on the other hand, tells me how fast this delta is going to change in each successive dollar move. In essence, it's the gas pedal to that delta. So I want to take advantage of a lower delta with a high gamma on an excessive move pending this rate decision. So let's take a look at the charts. First of all, I'm going to use the SPY for the S&P 500 and the Qs for the NASDAQ. As you know, we've got a wedge forming here. Any movement to the upside could have a substantial break on the outside of this wedge. Any decline in price could bring us down to the bottom of the wedge and a potential breakthrough. On the Qs, it's the same setup. We are very close to the downtrend line, so a move higher or a breakout would put us above this downtrend line, above a channel, of course, and a potential move back towards near those all-time highs that we saw in July. On the other side, if we get a market that does not like what they hear, the breakdown to the bottom of the wedge and possible fall through puts us to the bottom of that channel as well. So here's the trade setup. First of all, let's go to the SPY. Once again, I mentioned I want to take a look at the 24 September time frame. That gives me 1 week from the announcement to make a decision. Taking a look at the option, I want to take a look at the 550 put with about a 22 delta, but about a 2 to 2.5 gamma. So this is about 1/10. So any upward movement here downward movement in price is going to be a multiplier of about 10 to 1. On the upside, same thing. We get a breakout to the upside. I've got a delta on the call side, the 570, of a 20 delta, and I've got a little higher gamma. So this is going to be more than 10 to 1 on the movement of pricing for this option. The whole package. Buy the 550 put, buy the 570 call for about $300. Each of these options can be closed out or should be closed out separately to take profits on this trade. I'm targeting something in the neighborhood of 40 to 50% profit on the overall package. So if the call goes up in price to about $5, take that off. If the put goes up in price to about $5, take that one off and have the other one for free. Let's go on to the Qs. On the Qs, same thing. September the 24th. Those strikes sit here at the 465 put side with about a 27 delta and a 2.5 gamma. Again, approximately 1 to 10 ratio. If I take a look at the call side, the skew here is a little bit different. It's a little less. So skew on the NASDAQ is more towards the downside. We've got a 22 delta and about a 2.2 on gamma. Once again, buy the 465 put, buy the 485 call for about 437. Here, my expectation would not be doing 40 to 50%. I'd be targeting about 35 to 40% profitability. So if you take that in essence, if either one of those two options goes to about 5.60 to $6, that's the time to take off one side of that trade. So there you have it. Using the SPY, using the Qs on what's called a gamma strangle situation on the pending FOMC rate cut and the conference call afterwards.
Hi there, this is Scott Yellow from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.